Welcome to Facts versus Feelings, Take 5 with Ryan and Sonu. Sonu, it happened. The Fed hiked rates again. This is the 11th hike that they have done since March of last year, taking interest rates from virtually 0% now to a range of 5.25% to 5.5%. One of the most aggressive hikings we've ever seen, the hiking schedules we've ever seen. The first question to you is, are they about done?
I think so. I think they're close to, well, forget close to being done. I think this is probably the peak rate we will see in this cycle, right? And at least given all the data we know, and by that, I mean most of the inflation data.
Yeah.
I think we're close to being done.
And that matters because, I mean, why does the Fed hike rates? Like, well, why did they just hike rates from 0 to 5 and then, we'll say 5.5? I'm rounding up here, close enough for government work. Why did they just do that? What were they trying to do?
So it was simply put, it was in response to the highest inflation in 40 years, right? Inflation last June hit 9%, right, year over year. The good news is that headline inflation has come down back to 3%. That's huge, right? But and that's come on the back of slower energy price inflation as well. In fact, energy prices have gone down about 17% since last year. Food prices also decelerating, and then you have things like used cars, new cars, inflation. All of that is starting to go down as well. So all those price pressures we saw last year, that's starting to go the other way right now, right? And the even better news is the fact that, you know what, last year they were saying for inflation to go down, the economy has to go into recession, right? Especially since the Fed would have to raise rates, and they did from 0 to 5. Like I said, the best news in all of this is that the unemployment rate is still at 3.6%, and the economy is growing more or less on trend, maybe even slightly better than trend, right? Over the last year, maybe I think the economy has grown about 2.5% or so, and that's huge.
Yeah, just like everyone predicted, right? The Fed would hike rates, the economy would actually
Just
get stronger, and the stock market's actually up from the time that they first started hiking rates way back in March of 2022. So you think about it, you mentioned some parts
speaking
of
of
inflation.
predictions,
Go ahead.
yeah. Speaking of predictions, Ryan, did you know that the Fed's staff members actually are no longer forecasting a recession? Right? For the last few meetings, they've been saying that, oh, the US economy is going into a recession later this year. For the first time in July, Powell in his press conference said Fed staff are no longer predicting a recession. How about that?
You know what I have to say to that? Welcome to the club. We've been saying that all year, so I'm glad they're catching on, because we've talked before on these very take fives. The economy, the consumer is strong, housing is bottoming, manufacturing is bottoming. It's not spectacular, don't get me wrong, but again, the economy is on a lot better footing than I think most people give credit. Now, you mentioned some of the parts of inflation coming back, also shelter, right? Like rents and things like that. Shelter is running at 8% year over year. There's a very good chance that comes back. Why does that matter? Shelter makes up, Sono, as you know, over 40% of core CPI. So some of those components to inflation are really coming back down, which again opens the door for the Fed to potentially stop hiking. One more comment on that, Sono. We took a look on the Carson research team when the Fed stops hiking after hiking aggressively for a while. And we looked at the last 10 cycles. 1 year later, S&P 500, so stocks, were up 8 out of 10 times with some really good performance. So just because the Fed stops hiking quite soon, probably, that's not a reason to think that this bull market we're in is going to end. So we've got about a minute to go. Any other final comments on the Fed, inflation, economy, what you had for lunch today? Anything you want to talk about?
I did have a good dinner, and I met with a lot of our advisors. So as did you too. So you met a lot of clients, right? So,
yeah,
but no, coming to the Fed,
all over the place. Yeah.
Coming to the Fed, I think it gets back to the fact that, look, given all the data, and you never know, you never want to say never in this business, right? That's dangerous. We could get an inflation upside surprise, but I do think the probability of a surprise is more likely to the downside. What does that mean? That means not only does the Fed not have to raise rates much more than where they already are, they've done enough. But going into next year, we could be in an interesting place where the Fed has to really think about pushing rates lower. Just as an example, the latest apartment list, private market rental data came out. rents are falling now almost 1% year over year.
And
Right.
there
So
you
that
go.
means official shelter inflation is going to go down too.
And we will talk about that when we get a little closer to that scenario. We've hit the end of the road in today's what do we call it, Sonu? I just went blank. The facts versus feelings, take 5. Everyone, thank you. We'll see you next time. The Fed could be done hiking. Take care.